Welcome back to the show. My next guest needs no introduction, Lyn Alden. First of all, how are you? It's been a while. We missed you at the Bitcoin conference.
I'm good. Yeah, it's my first year had the first part of the year had a ton of travel, so I've been kind of like keeping a little bit tighter in the second half of the year here.
Well, I want to get your take on some of the things that were announced at the Bitcoin conference, including these Bitcoin strategic reserves for the United States. But let's start with macro. You had a great
Sure.
report out. First, before we dig into some of the things you wrote about, just what's your reaction since the market meltdown a couple of weeks ago? I mean, it seemed like we were on the edge of a deflationary bust, and then all of a sudden we recovered again. So, what exactly happened since then?
I think my biggest takeaway is it was humorous to see how emotional people are and how fragile everything is because, when that happened, there were like serious professionals going on TV and asking for like a 75 basis point emergency cut. And then they had to retract it like a week later because the market just kind of recovered. Um, and so it kind of shows like the alarmism out there and also how reliant market participants are on central entities. And kind of like they're quick to go beg for a rate cut. I also made a point of like kind of observing how information flows. So people kept saying it was a $20 trillion carry trade, and I didn't see a good source for that number. And when you kind of analyze like how big is the actual number, depending on how you define it, it's like a tenth of that or less, which is still big. But it's not as big as the numbers that were kind of being shown a lot. So I think a lot of it was overblown, and it was kind of just like a washout of leverage. It doesn't mean it's entirely over yet because it kind of shows that there are these other things in the system. But it just kind of shows how short-term focused everyone is, how reliant they are on central policymakers, and how kind of information just kind of flows around. It's funny to watch.
Well, and I heard that if the Fed were to come in and cut rates, that would have kind of exacerbated the issue. So, how did things recover so quickly? And do you still anticipate a rate cut in September given the cooler inflation print that we just got?
I think it recovered quickly because the fundamental problem wasn't too big. It was basically just like a bunch of levered traders that got over their skis and had to quickly pull in their leverage, basically degrossing. Um,
Mhm.
and I also think I kind of fade the idea that rate cuts would have made it worse because it's the speed of it too. So it's not just well, there's two reasons. One is the rate of change that matters, right? So if the dollar were to drop dramatically against the yen in a short period of time, then yes, we could get like a replay of what just happened. But if there's a more
Mhm.
gradual shift, especially now that a lot of those trading books are delevered, it shouldn't really have the same impact, would be my expectation. And two, it's not just borrow the yen and buy dollar assets. It's borrow the yen and, for example, buy Mexican assets. Anything that they expect better yield or return from, compared to a near zero yielding yen loan that they take out. And so just because the dollar weakens relative to other currencies potentially based on a rate cut wouldn't necessarily be the same as the yen itself strengthening against most currencies. That's what happened in this cycle. It was more about yen strength than it was just about a little bit of dollar weakness.
Got it. Well, as far as the rate cut that the market is expecting, I think I heard you say that this recent CPI print was sort of unremarkable, and you don't think that 25 basis point rate cut is really going to do anything and might already be priced in. Can you talk a little bit more about that and what you forecast for the next maybe 60 to 90 days?
Yeah, so my expectation, unless something dramatic happens, which is, markets are levered and fragile enough that that's always possible, but assuming nothing dramatic happens, I would expect a kind of a mild rate cutting cycle. So fairly modest rate cuts, maybe next meeting, maybe the meeting after that. We'll see what happens with incoming economic data and CPI prints. And other than psychological, I don't think it's that big of a deal if we get those mild cuts. And the reason for that is kind of similar to why rate hikes had kind of weaker effects than many people expected on their way up, which is to say that a lot of people locked in really low fixed rate debt. And so if mortgage rates or short-term lending rates or business rates, whatever the case may be, if that goes down a little bit, it doesn't really change too much. The people still have their locked-in debt. They're not going to refinance that for the most part. You're not going to get a big mortgage refinancing boom from anything less than probably like 100 basis points of cutting. And so I just don't think it's that big of an impact. And I think in general, people keep overestimating the importance of the Fed and underestimating the importance of fiscal, basically deficits versus surplus. In this case, very large deficits. I continue to view that as a much bigger factor than around the margins things that the Fed does. Now, of course, if they were to come out tomorrow and cut rates to zero, that would be a huge impact. But if they just start a gradual rate cutting cycle, I think it's somewhat overblown what the impact would be.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 900 megawatts of operational data center capacity and an additional 1.1 gigawatts under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership laid the groundwork for the original advancements in Bitcoin mining ASICs. It's really the only company in the industry with the track record and clout to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs. Now, Bitdeer is leveraging years of expertise in data center and cloud management into high performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. One thing that confuses me, Lyn, is thinking back on previous bubbles and rate hiking cycles. When they cut, I feel like that's when the market tended to crash. So does that typically happen?
Yeah, but it's not causal. It's not like cutting it makes it crash. It's that usually something bad is happening, generally a softening economy or some sort of like, liquidity crisis or something. And so they cut rates in response to that, but then also asset prices are not doing very well because they have lower expected earnings because of a potential recession or a softer economy. And so normally rate cuts are not very good for market prices. This one could be different in the sense that they're coming down from higher than normal levels, at least in modern times with the amount of debt we have. And so going from high to kind of normal is different
Mhm.
than going from, say, normal to low because of a economic softness. Basically, if the economy just kind of is average here, then their mandate of balancing employment and inflation can point toward mild cuts without necessarily implying there's a recession or a severe recession. It doesn't mean I'm super bullish on the S&P 500 because it's already, the valuations are rather high.
Mhm.
So even if earnings don't have a meaningful dip, and even if we don't have any sort of significant recession, I just think that the forward return prospects are somewhat lackluster.
Got it. Okay. Well, people who follow you, they know that one thing you keep repeating is nothing stops this train, that fiscal dominance. I want to talk to you a little bit about that because the Treasury and the Fed are sort of working in opposite directions. While the Fed is trying to tighten, the fiscal spigots have been very, very loose. And they've been doing that partially by issuing these short term T bills. Can you talk a little bit about that? Because I know you focused on it a lot in your recent report.
Sure. So when we look at the Fed, first of all, by raising rates, it does two main things. One, it makes the currency more attractive for foreign holders, so it strengthens the currency, all else being equal. And two, it puts more pressure on borrowers, so they're less likely to borrow, which means less money creation from the private sector, and just more chance of economic softness and weakening. On the other hand, the fiscal deficits, generally larger deficits, are stimulating for the economy and with the offset of being potentially inflationary for the economy, especially if down the road those deficits become monetized again. And so it's kind of like trying to drive a car while also, you're putting the gas and the brake at the same time, which is kind of how the fiscal and the Fed are kind of acting with each other. And then the Treasury has other tools. So in addition to just the deficit itself being stimulating and inflationary, they also can shorten the average duration of the debt that they issue. And what that does, basically, a T-bill is very similar to cash, right? There's virtually no price risk, and you get the full faith and credit of the U.S. in nominal terms. Whereas if you have a long duration Treasury, you basically have a lot of volatility and
Mhm.
risk in case that interest rates go up in the future, including kind of that long end. And so by introducing more T-bills, they basically are issuing lower risk type of debt. Um, and they're also, in this case, able to pull money out of the reverse repos. So there's a lot of money market funds, and there haven't been enough T-bills to accommodate that demand. And so what the Fed doesn't want to happen is for all that excess demand to push T-bill yields below their interest rate target. Because that would defeat the purpose of trying to be hawkish, which they're trying to do.
Mm.
So what they do instead is they open the reverse repo facility and say, you can put extra cash here at this rate. So it makes it so that they don't drive T-bill yields below the target rate. But over time, as more and more T-bills come out, those money market funds can go and buy T-bills again. And so by doing that, it kind of keeps the market liquid. There's not like cash being drawn out from bank reserves and things like that because as it's being drawn out, the repo facility is kind of putting cash back in. But the downside is that the government is funding itself with shorter average duration because of that, and it's kind of looks unusual. They kind of have a target of how much of their debt should be T-bills, and they're currently over that target. Now,
Mhm.
the somewhat unintuitive thing is that their average debt duration hasn't really gone down too much because they also have issued a lot on the very long end in recent years, and so their average debt duration is not particularly out of normal. Just specifically their rate of very short-term debt is higher than normal.
So, do you anticipate that we're just going to muddle our way through this and remain sort of choppy, but continue to, I mean, basically issue more debt, increase the deficit? I know that you've talked about the CBO projections and just how much debt they anticipate as adding, but doesn't something stop the train eventually?
I mean, on a long enough time frame, yes. But if you look at how this normally plays out in emerging markets, it can just go on for a very long time. Like look at Argentina. How long have they had serious inflation? Right? It's just
Mhm.
it's just year after year after year of yep, it's still a problem. Yep, politicians still don't know what to do about it. Yep, it's still a problem. And I think basically what we're going to see in the U.S. is kind of a low grade version of that. Basically, a developed market with emerging market characteristics around the
Mhm.
margins, which is to say structurally big deficit, no appetite among politicians to be able to fix it, high levels of polarization to even figure out how they would fix it. And then what makes it even harder is that should they somehow fix it, let's say somehow next week both parties get together and say, okay, we're going to raise this tax, we're going to cut this spending, and we're going to do this, we're going to get the deficit down to like, 2% of GDP instead of 6% of GDP. If they were to do that, the problem is that the U.S. tax receipts are more financialized than most other countries, meaning that if stock prices go down in Europe, it doesn't affect European government finances as much. Whereas if stock prices go down or even just sideways for a while in the U.S., our tax receipts start to suffer.
Mhm.
It's a couple reasons. One, we have more wealth concentration, and two, a lot of our CEO and executive compensation is
Yeah.
very much tied to the equity and options and things like that, basically the performance. And so you can have a situation where you could try to do austerity, but then ironically hurt your tax receipts and potentially keep the deficit as wide or similarly wide while also having a slower economy. So nothing short of a very significant overhaul would basically stop the train, and probably after a pretty material currency devaluation as well.
When I'm on Bitcoin, Twitter, X, whatever you want to call it, I hear a lot of people predicting that there's going to be at some point something that breaks and then it ushers in QE infinity. Do you agree with that? Because I know that in the past you have said that the Fed will tighten until something breaks and then they kind of have to reliquify. But is it as dramatic as some people are forecasting? Because I feel like that's sort of the thesis for Bitcoin ascending to the six-figure range is we really need the money printer to go burr on another level.
I don't think that's been another level. The way I would kind of phrase it is that things can break, but sometimes that thing that breaks is not very dramatic because it's kind of like a plumbing issue that gets fixed right away. Probably the best example is the repo rate spike of September 2019, right? That was one of those things that everybody who's like focused on macro freaked out, and technically, if left
Mhm.
unaddressed, that would be a catastrophic problem. But it didn't. It wasn't actually. It wasn't like banks were going down. It wasn't like, we were having some big noticeable thing for anybody outside of finance. It was this little like micro break that was fixed, within a 24-hour period, thanks to money printer go burr. And we just kind of mildly then things started to do well. Asset prices went up until of course we ran into COVID. Um,
Mhm.
and so I kind of see a similar thing like that where we get some mild breakage somewhere, and then that's the Fed's signal to kind of go back to balance sheet expansion. And the funny thing is, the New York Fed is basically expecting that, right? So in their annual report, they look out and they kind of look at, let's say, by the end of 2025. They
Mm,
probably expect to go back to balance sheet increases, um, and so they would not phrase that as QE, because in their model, and of course things could change based on if we get a recession or something, maybe, but in their model, basically recession aside, they would go, this quantitative tightening, we eventually would run out of the reverse repo facility, and any sort of further tightening would eat into bank reserves. And they want to maintain what they call an ample bank reserve environment. And so once you get down to a certain level, you get something akin to like that repo spike, or you could
mm,
technically try to stop right before something like that happens, or just use something like that as a signal. And then when they do go back to balance sheet growth, it doesn't necessarily mean like what we saw in March 2020. It doesn't mean, balance sheet goes straight up, but their target is to grow the balance sheet in such a way that it's a constant percent of GDP. That's kind of like their back of the envelope expectation of what they're expecting. And
mm,
if we don't get a crisis, if we don't get a recession, that would be my base case as well. I think their math is fairly accurate in that sense. But then we go back to an environment of the monetary base kind of gradually going up, very large deficits that are being partially accommodated by the Fed there. They wouldn't phrase it like that, but that's what they'd be doing as long as they're structurally increasing their holdings of treasuries. In
mm,
addition, they also specifically view themselves as continuing to sell off their mortgage-backed securities while going back to treasury purchases. So their balance sheet rotates more toward funding the government and less toward funding, homeowners essentially.
mm.
Um, and so that's kind of, even they are basically calling for that, and I think that's directionally correct.
I've heard some analysts say that we're already in a recession, that we're gonna like look back at the data and say, oh, it started maybe a couple months ago. Some have even said it started in October of last year. Do you agree with that?
So I think it's possible, but I generally would fade the more severe ones. So some of the payroll data is unclear. There's different ways of measuring payroll, and they're kind of conflicting with each other. There are other ones that don't really get subject to revision, like for example, jobless claim filing. That's not
Mm,
really an estimate. That's just an account of things that happened, and that doesn't look particularly recessionary,
mm,
other than maybe really early stage recession. Technically, it's possible. We did have kind of a technical recession some years back when we had two negative quarters in a row of GDP shrinking. That's not how kind of the official recession is declared, but that's kind of like a rule of thumb that people turn to, and that's because we were kind of coming down from sort of stimulus highs. So we, we
mhm,
we had like kind of rotating soft patches. Basically, we've had a manufacturing recession, we have a commercial real estate recession, but we have a travel boom, and we have a services holding up pretty well also. So there's like pockets of the economy that are in a recession, but those don't seem to be enough yet to have us in a full recession. But I wouldn't be shocked if, say, we look back 6 months from now and it turns out this was kind of like early stage recession. But one of the kind of the cycles I'm using as a kind of a guidepost is the 2000s decade, kind of like the 2002 to 2007 period, because after the
okay,
dot-com bubble, we had what was effectively a very mild recession. It was more mild than the ones that came before it. It was more mild than the ones that came after it, kind of in kind of both directions. So it's a mild recession, obviously a big drop in stock prices. The Fed cut interest rates, and things just kind of carried on from there. So the only thing I would really overlay on top of that is the fiscal situation, that we basically would
mhm.
be in a similar environment, but with more overall fiscal stimulus, which is one of the factors why I point toward a mild recession, if we get one, and potentially one with somewhat more stagflationary characteristics, or at least less disinflationary characteristics than you normally get in a recession, because you have that kind of constant background stimulus while you're potentially going through it.
Got it. Yeah, it seems like the fiscal is offsetting everything. And I don't even know what to believe with the employment data because they are constantly revised. And also, it
Yeah.
seems like they're just adding a ton of jobs in the public sector. So it's
Yeah.
mostly the government just continues to balloon and continues to spend. And yet, the private side of the economy is weakening. And I hear of more companies that are having layoffs. So it's just hard to know what the truth is. And that makes me honestly think about the election because when I watch the news, and obviously depending on the outlet, I have no idea which way this is going to go. One poll says it's this person in the lead, another poll says it's this person. And one thing I remember you saying on my show and several others is that we sort of ping pong back and forth, left to right, blue to red, back and forth. And for the average person, it seems like quality of life deteriorates and cost of living increases. So, do you see the economy and the markets going one way or another depending on who gets into office?
I certainly think that parts of the market could. For example, if you get say a Trump victory, all else being equal, that administration is probably more accommodative for Bitcoin and the broader, crypto space. And they're probably more accommodative for other sectors that are generally more in that camp. If you get a Harris win, probably not as constructive toward Bitcoin and crypto, but instead you might get something more kind of green related, or things like that. You might get more tightness on energy production, even though the current administration actually has not been very tight on energy production because they didn't want to exacerbate inflation, which is funny because like when Biden campaigned, he was rather anti domestic oil production, but didn't really follow through with that, which I think is a good thing. But it's just kind of so I kind of
Mhm.
expect her to probably do a similar approach, because if you do kind of cut down on domestic oil and gas production, you're probably going to exacerbate inflation risks. So around the margins, obviously elections matter, and then outside of economics, they matter. There's a whole other things like social things that don't really apply to investments that I just don't really like. It's just a different bucket of things. So it's not to say that elections don't matter, but it's to say that none of my kind of structural forecasts or expectations for the economy would be materially changed based on the election outcome.
Okay, that's interesting. I actually have had guests say that because a lot of people feel that really it's a uniparty. You're kind of voting in the same outcome either way. And one thing that I saw you talk about in the report, and this kind of goes back to the Bitcoin conference, is the idea that Bitcoin is bipartisan, and we actually did see that. I think you've pointed out on different shows how it wasn't. It seems like it's just conservatives embracing Bitcoin, but actually there were Democrat lawmakers there, and people have been trying to educate Kamala Harris on Bitcoin. I don't really know how that's going. I haven't been following it as closely as I should be. But can you share a little bit about that and the direction you see things going? Because I mean, you mentioned off the top of the last question, it seems like you think Trump might be a little more friendly to Bitcoin, but maybe that'll change. Do you think so?
I think he knows the momentum of where things are going, so I don't think he personally has a big reason to be against it. It doesn't mean he'll necessarily go. He might not do all of his campaign promises that he made, but I think it's less likely he would turn hostile on it at this point. It's possible. Anything is possible. I don't think you should ever kind of trust a politician. They're all like on both sides right now. They're in their pandering election
Yeah.
campaigning environment now. One thing I did point out, to your point, is that even though a lot of the headline speakers were from the right side of the political spectrum, there were a number of politicians there from the left side of the political spectrum. And during the conference, a bunch of them even wrote to the DNC and
Yeah.
said, like, this party has to kind of get up to speed on this a little bit better because this is not like the right way of doing things. It's putting, votes and fundraising and things like that at risk. And the reason that's important is because, when you think of like major tail risks that could really impair or otherwise disrupt Bitcoin adoption, one of them would be a very hostile U.S. government. And even if
Hmm.
it's not, even if it's not bad enough for Bitcoin, it's still bad enough for American Bitcoiners. As American Bitcoiners, that we can be pressured and we can have issues against us. We obviously don't want a hostile environment. And so when we look back at, for example, when they banned gold in the 1930s, people often bring that example up as though like, oh, as though the government's a monolith and can just decide to do things. Whereas back then they had a super majority. right? They
Mhm.
basically, there's such a kind of a collectivist concentration of power at once that they were able to do rather extreme things by American standards. Whereas in the current environment, as long as there's kind of enough political pressure that there's not any sort of supermajority against Bitcoin, then it's at least somewhat shielded from some of the kind of the worst outcomes. If you have, say, a majority of Republican lawmakers are either kind of neutral or for it, and then you have a minority of Democratic lawmakers that are kind of neutral or for it, then it's hard to do any sort of like really anti-Bitcoin draconian type of legislation. And there's more levers to kind of push back on should they attempt it. So I think that's why that at least some degree of bipartisanship is relevant to be aware of and to promote.
Do you think that the Harris administration would make a positive turnaround on Bitcoin, given that there is this momentum and very passionate people on the left on the progressive case for Bitcoin, trying to educate lawmakers and the administration on this? And I think they had a call with like Mark Cuban, Scaramucci, but I heard it didn't go well. But do you see that? Do you think that it'll change?
So I'm not tied enough into politics to have an opinion about that specific administration. I don't know what she's going to decide or her vice president. I don't know what route they would go there. I do think in general that there's a pretty significant minority foothold in the Democratic Party. So I kind of focus on that rather than try to speculate what this specific administration should do, or even if they're going to win. We don't really know which way
Yeah.
it's going to turn out yet.
It's time for a quick break to hear these messages from my partners who make this podcast possible. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing wallets out there. Speed is a secure, low cost way to send or receive Bitcoin instantly. It's super simple and scores high user ratings. You can even use it to shop gift cards of your favorite brands and earn rewards. Download Speed using the QR code on the screen or the link in my show notes and use promo code COINSTORIES10 to get 5,000 free sats. Next up, Coinkite. Coinkite makes everything you need to safely self-custody your Bitcoin, including the cold card wallet. That's the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code CoinStories. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your 30-minute free consultation today. All right, back to the show. Right, completely. I mean, the next couple months I know are going to be crazy. I saw just today that the market, people are betting on the election, right? And
Yes.
that the market has sometimes been even more accurate than polls. And I believe right now that the market thinks that Kamala is going to win. So I guess we'll see how it plays out. But speaking of Bitcoin, and the multiple candidates that are saying that they would create a strategic Bitcoin reserve, some are focusing more on just holding the Bitcoin that the U.S. government already has, and others like Trump and Cynthia Lummis talking about actually accumulating more Bitcoin. Can you talk about your thoughts on that? And could this actually help rebuild the economic strength of the country or strengthen the U.S. dollar?
So during reserve accumulation, that generally is used by countries, ironically, to weaken their currency to a certain extent. And so, for example, if a country is running a really big, say, trade surplus, so a lot of value is flowing in, some of the things they'll do, like for example, Switzerland did this. They'll keep buying reserve assets. They'll basically keep printing their own currency, buying reserve assets, so that their currency doesn't appreciate too much. So they can kind of run those mercantilist policies. Technically, the United States could do similar. They could print a lot of dollars and buy any number of reserve assets. It could be gold, could be Bitcoin, could be foreign bonds or equities, whatever they want, really. And the interesting thing is that the United States actually has a much smaller amount of reserves as a percentage of GDP than most other countries. And it's because we are like the axiom of the system, and
Mm-hmm.
so we don't really have reserve assets other than a fairly small amount of gold when it's compared to
Yeah.
GDP. Most countries have much bigger reserves because they need them and they use that as stability. So it is there is a case to be made that the United States could just become like any other country and go from, say, having reserves of 2% of GDP to 5 or 10%, which would kind of bring them in line with a number of other developed countries. Um,
Yeah.
but I'm kind of neutral on the topic because obviously the upside is there's a little bit more political shielding from that. It would probably be good for price. It would send a very positive signal to other countries to go ahead and do the same thing. So if you want to enter, a new stage of price appreciation and scale and probably lower volatility, um, that's probably a good thing. On the other hand, I think all else being equal, I'd rather have individuals accumulate
Hmm.
before governments get in. I like to have more time to see other ones go in. I think the key takeaway is we can't really control who buys it or who figures it
Yeah.
out. I would certainly say that anyone running a pool of capital, that if they were to figure it out, obviously from their perspective, the rational thing is to then go buy it.
Well, I mean, maybe this is too simplistic, but I mean, if I think of a nation state buying Bitcoin and the price appreciating, that they could eventually have, instead of all these deficits and debt, a surplus by which they could spend on things like education or infrastructure. I mean, improving the lives of the Americans or the citizens that live in the country. I mean, is that possible ever?
It's possible. It's very, there's still a lot to restructure. But I mean, for example, if I was in charge of the treasury and it was my job to determine whether or
Hmm.
not we should accumulate Bitcoin, I would say, of course, let's accumulate Bitcoin. If possible, I even want to do it in secret to get a significant
Hmm.
position rather than move the price before we actually buy much of it. So I'd have to kind of just work to see what's possible. Basically, whatever seat you find yourself in, if you're running capital and you end up, appreciating the aspects of Bitcoin, it makes sense from whatever seat you're running in to then go and buy it. You'd have to, the United States would have to buy a pretty significant amount and get a pretty significant price appreciation to really make a dent
Yeah.
in the debts and deficits.
Yeah.
But I mean, around the margins, every little thing like that can help.
Yeah, how many Bitcoin would you need? Or what would the price per Bitcoin have to be, and how much would you need for us to solve the 35 trillion debt? That I would love to calculate. So one thing that you've said about the price, and obviously it's been very, very volatile, is that Bitcoin has been trading within a range since about March, but now it's on sort of the lower end of that range. So can you talk about what you forecast? Because I had a guest recently, Tom Lee. He still thinks we're going to like 150,000 this year. And then at the conference, we heard really bullish forecasts. And I know that some of them were out like, 1 or 2 decades, but many million per coin. And I mean, I'm bullish, you guys, but I don't know. I look at that and I'm like, there's got to be something that happens that prevents Bitcoin from going up that much and all of us getting that lucky. So, what are your thoughts on the price?
So yeah, two different time frames there. I never really try to predict a quarter or two ahead because there's any number of idiosyncratic events. I do think as we look out to 2025, I'm pretty bullish. I don't really have a strong opinion for the remainder of this year. We were kind of trading in that 60 to 70,000 range for a while. Lately, we've been dipping into the upper 50s, which is not great. Um,
Mhm.
but I think that, especially once we turn to a more pro-liquidity environment, if we see the Fed eventually layering in some gradual rate cuts, if we do get kind of that transition from balance sheet shrinking to balance sheet growing, even if it's not at a rapid pace, as those things occur, later this year and then probably for the balance sheet next year, that should probably help global liquidity. And one thing I point out a number of times is that the best correlate that I've seen for Bitcoin price is global liquidity. It's not the
Mhm.
only correlate, but it's among things I track that's both
Yeah.
both logically and then in practice one of the better correlates. And since I expect probably global liquidity to go higher in 2025,
Mhm.
and given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish. As far as those really long-term forecasts, one thing to keep in mind is that they were not like inflation adjusted. And so some of the in for like Michael Saylor, for example, he gave that talk about the
Yeah.
I think the 21-year price forecast, which is a nice
Yes.
touch. And like if I recall correctly, his base case was something like Bitcoin becomes 7% of global assets, up
Hmm.
from effectively like a tenth of a percent or whatever it is now.
Yeah.
And so while that is obviously a huge run up, that's basically a 70x appreciation in terms of percentage of total assets. It's not as though Bitcoin has taken over the world in that scenario. So basically, in
Yeah.
21 years, can it go from 0.1% to 7%? I don't really view that as like an outrageous possibility. And that was his base case. And the way that you kind of can arrive at that is something, now depending on what source you reference, total global assets are, somewhere close to $250 billion, which is a really funny number, 1,000 trillions. I think it's something like 900 trillion, right?
Uh-huh.
That's kind of the
Yeah.
baseline. And over time, when you um, go through growth and inflation for another 21 years, that
Hmm.
number is going to be a lot higher. That's going to be a number of quadrillions, like thousands of trillions. And
Yeah.
then as Bitcoin goes from, whatever tiny sub 1% it is now, up to, some presumably higher number of percentage. That's how you get those multi-million dollar numbers.
Yeah.
Even though in inflation adjusted terms, I mean, it's obviously a lot of appreciation, but it depends how bullish you are.
Well, when I think about global wealth and that 900 trillion figure, I think about what Jeff Booth says and writes about in his book, which is that a lot of the debt in the world is insolvent. Can you talk a little bit about that? Because when we think about the 900 trillion, I mean, some of that is it's debt, right? And why is
Yes.
it insolvent? So that means they have to issue more debt to try to pay it off, which they won't.
Yes. Well, I mean that's why I think nominally a lot of these numbers are going to go up, because
Yeah.
one way that they deal with high debt loads at the sovereign level is just print more of the currency units that those debts are legal obligations for.
Yeah.
That they basically everybody turns into Japan, except possibly without Japan's like high degree of kind of unity and without
Hmm.
their structural like you know current account surpluses,
Surplus. Yeah.
and things like that. So we can enter Japan from wherever kind of situation we are in. So Europe would enter it with their kind of fractured, polarized, energy starved situation. America would enter it in their, in some ways, more powerful, but otherwise, we're the ones running big structural trade deficits. When we also get into this kind of constant Japanification, ours could be more inflationary than theirs has been. Um, and so I think that's kind of the later stages we all enter, is that all the developed markets start to get emerging market like characteristics, at least in terms of their money, which is to say that there's just like this higher background level of monetized fiscal deficits.
Hmm.
And then it becomes a question, what is that experience like in everyday life? I mean, that's partially going to come down to how much productivity we have and whether there's
Yeah.
wars and things like that. So if there's a lot of productivity, then you can get a lot of money printing, maybe not as much like CPI inflation as you'd expect, but instead a lot of that money printing would go into harder assets. On
Hmm.
the other hand, if you don't have enough productivity offsets, if you're um, partially deglobalizing the supply chains, or there's war, or there's energy shortages, or whatever the case may be, then you're likely to get pretty substantial price inflation along with that structural fiscal monetization. And so basically the bonds insolvent is basically, think about it, that the purchasing power of those bonds
Yeah.
are likely going to lose value against most other reasonably scarce things over time.
Yep. Are you surprised that Bitcoin hasn't performed better given how much fiscal stimulus there is? And I mean, we saw recently before that meltdown, stocks hitting new all-time highs, real estate prices remain high. I mean, why haven't we hit the six-figure mark? Why, especially given the fact that now we have the ETFs, why hasn't there been more liquidity flowing to Bitcoin?
Well, I think I'm of two minds about it, because I expected Bitcoin to probably hit 100K last cycle. We didn't get that high. Kind of my first target was for a trillion market cap, which is around 50,000. We got to that, and then
Mhm.
once we reached that, I was like, yeah, I think we're probably gonna hit 100K, and then we ended up undershooting that. Um, I'm not particularly surprised with where we are now, though, because going back to my prior point about correlating with global
Mhm.
liquidity has been flat for like 2 years. So the fact that Bitcoin's chopping around, at least on that historic metric, does make a lot of sense. Um, and when we entered this year, I expected to be higher, but not necessarily new highs. So we got those, at
Mhm.
least we nominally touched new highs, even though we're not at them currently. And my bullishness really extends into 2025, and is kind of reliant on that that rough timeline of Fed easing and then going
Got it.
back to structural, if basically if I thought that the deficits were going to shrink, or if I thought that the Fed was going to be able to stay tighter for longer, then it might have to push back my bullish Bitcoin forecast.
Got
Because we're basically comparing exchange rates between two types of money, so the fundamentals of both monies matter.
it.
Um, but based on the timeline I see, I'm fairly constructive for next year.
Got it. Okay, well, that's good to hear. I'm about to have Whitney Webb back on my show, and one thing that she's talked about and written about recently is the idea that there's this sort of plan to hyperinflate the dollar into Bitcoin. That we used to be backed by oil, we've moved away from the petrodollar, and now Bitcoin will somehow fulfill that. And obviously, there are concerns that centralized forces will not that they can impact Bitcoin or co-opt it, but that governments and even the massive corporations will incentivize and encourage people to hold Bitcoin with them as opposed to being self-sovereign and in self-custody. What do you think about that? Do you believe that there is some sort of strategic maybe plan in place to help what's happening with the global economy and the shift towards things like BRICS, to keep dollar dominance through a Bitcoin standard?
Well, so there's different like parts of government, right? Government is not particularly unified. We see that in obviously the two parties, but even like the kind of the career people, there's different factions. So there's like the intelligence agencies, there's the military, there's the other parts of the government, and sometimes they're not even in agreement. Some policymakers, for example, want to ban Bitcoin mining and push it out of the U.S., whereas other ones are actually like, no, we'd rather have all of it so we can censor the network, so we can like censor North Korea. It's like those both those opinions exist in
Yeah.
U.S. government, for example. I do think a general theme. I do think that, and I've said this a number of times, that I think the biggest battleground is going to be around privacy and to some extent self-custody, but especially like private custody.
Yeah.
That's where I think probably the it's going to be a very long, drawn out, back and forth there. It obviously will be jurisdiction dependent, but I think that we've kind of reached the point where they're like, yes, it's fine to hold Bitcoin, preferably hold it in our big Wall Street custodians, so we
Hmm.
can have it. We know where it is. We can
Yeah.
take it if we ever want to. We can surveil it. The part that I think they're going to make harder is privacy and payments, and so that will come down to how good is the tech, how distributed, how hard is it to do anything about that, how many people want to use it. And so I think that that's probably where the frictions, I would guess, are going to be.
But I mean, even people are worried about this idea that stable coins are going to be used sort of to drive more demand for US treasuries, and I see some sort of like intersection between US dollar hegemony strategy and then using Bitcoin or stable coins to do that. Do you think that that could be the case?
Well, I think if there was a more unified government approach on this, they probably would have already had a Bitcoin strategic reserve rather than just kind
Mhm.
of like talking about it now. I think they would already have a meaningful one, which by most accounts doesn't seem to be the case. As far as stablecoins, there are a number of lawmakers increasingly figuring out that
Yeah.
stablecoins are a new demand for treasuries. Because if you look at
Mhm.
a lot of countries are quote unquote gradually de-dollarizing in the sense that they're buying fewer treasuries than they used to. They're instead buying things like gold, or they're around the margins diversifying the currencies that they buy assets in. But from a bottom up perspective, there's no de-dollarization. For example, on the black currency markets of Cairo, they're not diversifying out of the dollar toward the Chinese yuan, for example, or in
Yeah.
Argentina. The bottom up is still very much dollarized, and that includes demand for stable coins, which are overwhelmingly for the dollar. So basically, that represents a way to sell T-bills to people around the world, even if their governments are not particularly buying them. And it's a double-edged sword because, and we talked about this before, of how the dollar as the global reserve currency
Yeah.
is kind of a two-sided thing. On one
Yes.
hand, it's really good for the state and for Wall Street. It kind of increases hegemonic power, but on the other hand, it kind of deindustrializes the country because the way we supply so many dollars to the world is through running these structural trade deficits. So most currencies they trade based on interest rate differentials and overall productivity and current account balances and things like that. And so they kind of find that natural equilibrium. Whereas the dollar has, in addition to those variables, this extra monetary premium on top of it
Hmm.
because it's the most liquid, best one. So all these other, countries in the world buy dollars and dollar assets, and so it drives it up above like its kind of normal like
Yeah.
exchange value that it would have on its kind of trade and interest rate merits. And so we kind of continually run these structural trade deficits. We continually hollow us out, and then that leads to things like political polarization, or realizing we can't make certain medical equipment during a pandemic, or we can't,
Yeah.
or our military's got too many Chinese semiconductors. And if you ever
Yeah.
had to swap them out all at once, that'd be a problem. So it kind of starts to accumulate issues. And so to the extent that they're successful in injecting more and more stable coins into the world, uh, on the other hand, they'll continue to be successful at probably deindustrialization as well. Um,
Mm.
and it's also just a note about magnitudes. I mean, right now, stablecoin market cap is still below 200 billion.
Hmm.
So even if it 5x or more and goes up to over a trillion, that's like half a year worth of deficits. Um,
Yeah.
and so that stable coins would have to get quite large, even though obviously every 100 billion matters. It would take quite a large growth in stable coins to kind of materially affect U.S. hegemony.
Got it. Okay, that's interesting. And what you just said earlier made me think of your brilliant chapter on the global reserve currency. Heavy is the head that wears the crown. Make sure you read Broken Money if you haven't. Before we start to wrap up, just anything else that you maybe really wanted to touch on, or you think people should be focusing on or paying a little bit more attention to?
I th- so the one thing that makes me optimistic is the amount of tech that's really kind of been coming together this year, and it's often in the areas that people don't even focus on. So there's kind of two tech paths in Bitcoin right now. On one hand, there's kind of like the BitVM roll-up tech that's kind of interesting to a lot of people. There's kind of more developments of, how would you maybe do an L2 on Bitcoin with optimistic fraud proofs and things like that that technically can make less trusted, like federations with more kind of trust characteristics in them, which can be
Hmm.
useful. But on the other hand, there's we've had the launch of numerous eCash wallets. Fedi's the big one, but there's also the Cashew protocol wallets as well,
Mm.
and these are really good for both privacy and for efficiency, especially for small amounts of money. And so that's kind of the example of distributed private payment tech that I think is a good thing. And then in
Okay.
addition, Nostr, even though it's still very small as a social network, one thing it's actually really good at is basically turning Bitcoin wallets into like open source Venmo, because
Yeah.
like if I wanted to send you Bitcoin right
Hmm.
now, it used to be that I'd have to go and be like, so can you send me like a Lightning address or an on-chain address? Whereas like now I can just look you up on Nostr and pay you
Hmm.
right away. So it's just there's
I see.
payment discovery, and so at least among Bitcoiners, or at least among people that at least have some sort of small
Hmm.
Nostr foothold, even if they don't actively use it, that actually makes wallets better in practice. And so some of the things that for example Ego Death Capital was investing in 2 years ago with for example some of the Trauma and eCash stuff, the fact that that's now
Yeah.
out in the wild is cool to see. And so I think there's a lot of focus on should America buy Bitcoin or should they not, or things like that. Whereas I think at the end of the day, the kind of usability and growth of the network is really important, especially for all these tools that kind of empower all the different communities, right? You don't want all the Bitcoin stuffed into like BlackRock and Coinbase. Ideally, you want
Yeah.
all these communities around the world to kind of pull some of the custody closer to them,
Yeah.
to use it, to understand it, and I think that's where a lot of efforts are best spent.
Yeah, I'm glad you brought that up. It's really exciting to see what Fetty is doing, and I'm going to have Obi back on the show soon, so I'll dig into some of what you just mentioned. I know that you follow AI closely as well, and I was kind of curious because sometimes I'm really impressed by the tools that exist with AI, and obviously ChatGPT has gotten so advanced. But then when it comes to the imagery, the images and videos, I don't know. I feel like there's a lot to be desired, if you will. Have you found like a favorite tool maybe for creating photos or imagery or design work that maybe I don't know about?
So I've liked Midjourney the best. That's where
Okay.
I've made much of the art that I've been reasonably happy with is on Midjourney, more
Okay.
so than some of the others. Um, it's fun for making quick things. Yeah, but if you go back like 3 years, there's a really good post I saw that was like AI generated imagery from 3 years ago and today, and the first one was basically like kind of an apple as though like a 4-year-old drew it, and
Yeah.
then the other one was a nearly photorealistic person.
Yeah.
And that's basically a 3-year progression. So even though right now there's obviously still funny things like extra arms or
Yeah.
basically the logic of the picture doesn't make sense. But how much progress happened in 3 years? We can just extrapolate another 3 years and see probably we're going to continue to get refinements in that area across the board. I certainly think we could go through like a lull in the sense that no one's really making money on AI yet, other than the GPU makers. So all these big entities are buying all these GPUs and providing AI services, but a lot of them are not profitable yet.
Mm.
And so it could be the case that profitability takes longer than some of them expect, and therefore they could slow down their GPU purchases. We could go through like a consolidation for a period of time, but overall, I think the tools are probably going to keep getting better. It kind of increases our productivity in pretty useful ways,
Yeah.
even though I kind of fade some of the more extreme bullish AI outcomes, at least in any, say 5-year increment.
I feel like I just don't know where to look for the best tools because anytime I've tried these platforms and I ask for an image, it just doesn't turn out that great. But then I online or on Twitter, especially, I see these very realistic photos or videos and I'm like, what are they using? Because anytime I've tried it, it's lackluster. I don't know.
I did a project. I don't know if you remember it called the Four Monies. It was like like an art
The
project that I did.
animation
Yeah,
video? Oh, that
well,
was
no,
beautiful. Yeah.
Well, no, that was the video Broken Money, but also I
Oh,
actually did just like an art piece, like a digital art
oh,
piece called The Four Monies.
okay.
And basically, I think if you Google Lyn Alden Four Monies, you'll find it.
Okay.
And so that was an art piece I did using Midjourney, and I had
Oh,
to kind of put a lot of time into it. I was pretty happy with how it turned out, and that was I forget when that was. That might have been like a year ago or like 6 months ago or something like that. So the tools have gotten better since then. So a lot of times when you see really good images online, someone had to iterate a number of times. They had to kind of do multiple queries in a row. And then, say they have something, then they have to kind of tell it to edit that part because that part doesn't make sense. And you kind of
mhm.
iterate over and over and over until you're getting what you want. And so, for example, that project didn't turn out perfectly, and it did take quite a while, but it was cheaper and faster and turned out more how I wanted it than if I would have hired an artist for it,
Yeah,
right? It just
right.
so there was a productivity enhancement there. And
Totally.
I've also used it just for offline stuff as well for like other types of image generation. And so, but it definitely is a skill set. It kind of changes, what at least what some artists will do, which is basically there is a skill set in being a really good query like writer, like knowing enough
Yeah.
to get it to make what you want, and then being able to iterate and kind of make it happen.
Yeah, I really hope to incorporate AI more. I mean, it would be great to take a video like this and just be able to upload it and trust that the software will literally pull out the best moments or
Yeah.
make clips out of. I mean, that would be incredible, but I haven't found anything yet. So, all right, anything else, Lynn? Thank you so much for taking the time and educating us like you always do.
No, I think we covered a lot, and I appreciate you having me on. And hopefully we can see each other again pretty soon at one of these events or
Y-
conferences.
Yeah, I hope to see you in person very soon. Thank you so much again. Your insights are always just phenomenal, and you help us understand what's going on, not just with Bitcoin, but with the greater macro picture. So, Lyn Alden, everyone, I'll have the links to her amazing newsletter and her work and her Twitter in the show notes. Thank you. Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. One of last month's top episodes was with Jeff Booth. At Phase and Hodl boosted 2021 sats and said Booth once again provides perspective to help see through the matrix and a hopeful path forward. The man is onto something, and we need 1,000 more that can communicate like him. I agree. I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.